Everyone thinks income tax was inevitable. It almost didn't happen. For the first century of American independence, the federal government had no income tax. It funded itself through tariffs, excise taxes, and land sales. This system worked until the Civil War demanded money faster than any tariff could supply it. In 1861, Congress passed the first income tax as a temporary measure to fund the war effort. It was supposed to expire when peace returned. But systems, once built, rarely disappear. The income tax did expire in 1872. For nearly 30 years, it vanished completely. But by the 1890, American wealth had concentrated dramatically. The railroad barons, oil magnates, and industrial titans controlled vast fortunes while the federal government struggled to pay its debts. Populists and progressives began demanding a tax on wealth itself. The wealthy resisted fiercely. They had a weapon, the Constitution. In 1895, the Supreme Court ruled that a direct income tax on property was unconstitutional without apportionment among states. This wasn't a minor legal technicality, it was a wall. Reformers realized they couldn't tax wealth through ordinary legislation. They needed a constitutional amendment. That meant convincing 36 states to ratify it. The political battle that followed was brutal. Progressive states in the North and West supported the amendment. Southern and Western agricultural states feared it would burden farmers. Industrial states worried it would drive capital elsewhere. Between 1909 and 1913, the political system fractured over the single question: should wealth be taxed directly? When the 16th Amendment finally passed in 1913, it wasn't a triumph of ideology. It was the result of a specific political alignment, one that could have easily broken differently. That same year, Congress created the Internal Revenue Service to collect and enforce the tax. But here's what the textbooks miss. The IRS wasn't designed as a neutral bureaucracy. It was built as a political instrument. The tax rates, exemptions, and enforcement mechanisms changed with every administration. Wealthy interests didn't fight the income tax's existence, they fought to shape its structure. The feedback loop that followed is predictable in retrospect. High earners hired accountants and lawyers to find loopholes. Congress closed some, created others for political allies. Tax rates climbed during wars, fell during recessions. The system wasn't broken, it was functioning exactly as designed, a mechanism for wealth distribution that could be adjusted based on who held power. The IRS became less a tax collector and more a political weapon. What matters now? The IRS wasn't born from economic necessity or moral principle. It emerged from a narrow political moment when progressives, labor movements, and regional interests aligned against concentrated wealth. Had that alignment failed, had the amendment stalled in 1912, American taxation might look fundamentally different today. The system we inherited wasn't inevitable, it was contingent. Understanding that reveals why every tax debate since has been, at its core, a struggle over who gets to define the rules. This video is for educational and informational purposes only and is not financial advice. Always do your own research. Subscribe to track the unseen power structures that shape your financial world. There's a new system every week. This video is for educational and informational purposes only and is not financial advice. Always do your own research.